Hello viewers, we'll be going over natural gas. In this video, we'll be going over the day-by-day probability model, how we find the models, and the forecast model for natural gas. So back to the technical analysis. Today we're down 1% on the 1 hour chart. We were approaching positive MACD, however we already saw a reversal between Sunday and Monday, and we're near oversold RSI. If we expand out to the 4 hour chart, we see a convergence back in between Friday and Sunday. However, between Sunday and today, we start to see a divergence in shape in the daily chart. If we expand out further, we're still oversold on the RSI, and we touch the 9-day moving average resistance. We got rejected. We did not close above it for several weeks already, so that is our first immediate resistance line. So I'll mark that as our resistance, and that also coincides with past support. And since we're below that support level, that now act as our immediate resistance. So that'll be around $1.89. And as for support, if we expand out, it is going to be a multi-year support. And if we match the past support back in last week, we can find support around a price of around $1.83 or $1.81, and that is around that range. So if we were to reverse and head up higher, that price movement is roughly around 3.8% to the upside, and to the downside is around 60 basis points. So I do believe we may head down lower and break this support level. It is not going to hold. So back to the day-by-day probability model. So as the day progresses, we have a slight favor to the upside. We have a 0 to 8% to the upside with a 50% chance, and a 25% chance on the extreme case between 8 to 17% to the upside. On the other hand, we have a 25% chance of natural gas heading down 0 to negative 8%. So back to the day-by-day forecast. Again, this model is now available in the link below, so do check it out. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these models we should focus on? Ideally, the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. This trend dates back to January 9th to April 7th, 2009. So let me point out why these two charts are similar. So what we have in the current trend, we started off touching the upper Bollinger Band, and then we proceeded in a downtrend. So let's just mark that instance there. So we averaged below the middle Bollinger Band, and then next we made a slight reversion to the mean to touch the middle Bollinger Band, and afterwards we see it continue to head down lower to touch the bottom Bollinger Band once more. So we have those points there. So let's just mark this as red. So in the trend in question, we start to see a similar pattern as well. We start off at the upper Bollinger Band, and afterwards we proceeded to average down below the middle Bollinger Band. At this instance, next we see it revert back to the mean to the middle Bollinger Band, and afterwards we see it head down lower to touch or near the bottom Bollinger Band, just like the current trend in question, or current trend. So we have those points there. So what we have is 1, 2, 3, 4 points. We also have 1, 2, 3, 4 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the model that we just examined was January 9th to April 7th, 2009. Back then, natural gas made a reversal to the upside with 4% to the upside. So if we head back to the day-by-day probability model, it coincides with this standard deviation of 50% chance between 0 to 8%. Again, this model is now available in the link below, so do check it out. If you enjoy this content, feel free to like, comment, subscribe, and thank you for watching.